penetration of mobile phones. Does that mean that I can't do pensions there? But Krishnan gave us a very good solution saying that we are doing it in the Solomon and Fiji. So is there merit in saying that there could be replicable models that could be seen regional? Can there be a replicable model that South America could also work with? I know a lot of you have already heard the solution of gift to pension that we worked with. But just for the benefits of the others, there was a pilot that we did in India to tackle the problem of domestic workers. I know I was laughing in my mind when Carlos said there are 4 million, and I was like, oh, 4 million, we have 40 million. That's more than the population of Canada. Sorry, Mike, I don't mean to offend you, but and they're highly portable, working here with me today, working with in Eric's house tomorrow, and probably gone back to their village day after. So how is it that you tackle the problem of reaching out to this cohort of people? This could be the problem not only of domestic workers, could also be head loaders, construction workers who are working, they're highly portable. Giving them access is a huge challenge. Making them make payments, which is one of the concerns that even Michael brought up quite well, is to say that it has to be accessible. It can't be 20 kilometers away and they're breaking their back to get there. It's a 2-minute film. I know most of you have seen it. It is still very entertaining. And I'm just going to play out the film, Achint, if you could, please, on gift to pension. This is one solution that we worked on a pilot about 2 years ago in India. And you just see the film and I'll talk more about it. There's no audio on it, Achint. Don't worry, when Apple launched their phone, they had the same problem. That means we're on the right path. Okay, so while they're setting this up, I can talk more about it. When we actually brought out the solution and to say that how is it that we can get each of these individuals who are in individual homes, or they could be in remote areas, to actually reach them is going to be far too expensive. There were solutions that could be thought through apps, there were solutions that could be thought through mobile phones, but that would mean a certain amount of infrastructure that would be required, which may or may not exist. So is it that we can actually look at a solution that could be at the doorstep of say Parul's doorstep, who is an employer of domestic help. And the reason I'm sitting here is because I have a lady at home who takes care of my children, and I don't have to worry about them being picked up from school. And that's the solution that we thought of. Achint, do we have that before I talk about it anymore? Yes?
This is Shanta. She's 22 years old. She lives in a little village far away with a husband and 3 children. But her family struggles to make ends meet. So Shanta decides to migrate to your city in search of work. You employ her as your maid. She works long hours. She takes care of your children. She cooks your meals and keeps your house clean. She sends most of her income back home to support her family, to put food on their table and send her children to school so that they may have a better life than hers. She does this year after year after year. When she's too old to work, Shanta returns to her little village. Her children are now grown up. They are educated and married, but have migrated to other cities. Shanta and her husband now live alone. But with no savings of their own, they struggle to make ends meet. They live without dignity and will live this way for the rest of their lives. But does it really have to be this way? Let's see this again. You employ Shanta as your maid. You talk to her about the importance of setting aside a small part of her income for her old age. And you spend just 10 minutes on the internet to help her open her own micro-pension account. And so, Shanta starts saving every month for her old age. Her savings are managed by the likes of LIC, UTI and SBI and will grow over the years. When she's too old to work, Shanta will return home to her little village. She and her husband will still live alone, but they won't struggle to make ends meet. Because of Shanta's micro-pension savings, they will now get a monthly pension and will live with dignity for the rest of their lives. This could be the story of your maid, your driver, your gardener or guard. Just 10 minutes of your life changed 20 years of Shanta's life. You can be that change. Give micro pension account today, her clock is already ticking.
Thank you, Achint. Very efficient. Right, so this is one of the models that we ran with in India, and we're now working towards a global gifter pension. This solution could actually work in the UK for the cohort that Darren was talking about, who's still not included. You don't have a big problem, Darren, we do. Or the problem that Carlos is talking about in Mexico, or Indonesia, where a large population is of domestic workers, or in Rwanda or Kenya, where you actually see a lot of cross-border workers. Another such solution that we actually worked with in India was with the World Bank in a district called Vijayawada. It's in the south east of India, in a state called Andhra Pradesh, where how it works is there are fair price shops that work, which are completely digitized through biometrics, through the Aadhaar system in India, where a customer simply just comes to the shop, authenticates themselves, put the thumb on the machine. The machine tells them that his household is allowed a ration of, say, 20 kilos for the family of 5, and he's allowed to take an X amount. So he just decides he wants to take 4 kilos, and he gets that rice. He puts his thumb again, and the payment is gone through his bank account. Now, we use the same infrastructure to be able to be built to do pensions, and we ran a pilot absolutely successfully, where, again, the customer could come and authenticate themselves on that same machine, open a pension account instantly, and the money was pulled through and sent into their pension account. And this also enabled us, what Gautam was talking about earlier, was being able to have an auto debit on their accounts. So then you don't have to worry about the problem of persistency. Since it's already, you've already taken a mandate of, say, a small contribution of 100 rupees is taken from their bank account every month. So now when they move, the account moves with them. They may be going anywhere in the country, and you have been able to solve that problem. So that was one of the other solutions that we were able to work with. John was talking about helpline callbacks, incentives, and we actually ran a nationwide helpline speaking in 13 regional languages in India. And thank you, Paul. They're very subtle. I've just got a 2-minute warning. I promise I'll take only 2 minutes. And with the truckers, we also ran up with an incentive program where the more they drove their truck and the more fuel they filled, if they stuck with the pension program, their miles actually turned into pension miles. Pretty much the way you and I earn our air miles, they were able to earn their truck miles. So there are solutions that are certainly replicable. There are molds that can be thought across countries. There is merit in donors thinking of solutions as well, which are region-based. There's certainly learnings. I'm not saying that everything is a cookie cutter. There will be, even between Kenya, Uganda, and Rwanda sitting right here, there will be differences that they will need to adapt to. But there is this basic infrastructure that can lie down where replicable models can be thought through. So thank you.
Thank you very much, Prul. I just had one question for you, Moses. When we talked briefly beforehand, and you said that one of the biggest challenges that Uganda was having was in the legal and regulatory framework. I mean, that's surely country by country. Even if we have the technology that is replicable across countries, how do you get around the other challenges that surely are just very country by country and there isn't any replicable model that applies?
Yes, thank you very much. What I said is, what we are trying to do in Uganda is to try and have a legal framework to expand from the formal sector contributions to those who are self-employed and those who are in the informal sector. But also without the reforms being completed, what we're trying to do is to understand the characteristics of the potential savers. There has been some studies partly financed by the World Bank, and also to try and find out what products would be most suitable for the people who are employed in the informal sector, because it's very difficult to tell people in the formal sector to save for 50 years without, or 40 or 30 years without getting a benefit. So we're trying to see what products within the existing legal framework that that can be attractive to the people in the formal sector. So education and demonstration of benefit is very important to these people, and there's quite some interest in terms of people coming on board. What we see as a challenge in most of these informal sector people, or those who are potential savers, as I mentioned, is the trust and confidence, especially of the public sector behavior, but also at individual level, issues of capacity. So what we are trying to do within still the existing legal framework is to educate and create awareness, and also try to demonstrate that these things are doable. What we've been doing and what we are planning to do with Pinbox and other stakeholders through a collaborative effort is to try and create efficiency by putting in place a platform that can be a public good that can be utilized by everyone in order to aid micro pension contributions, but also in the payout phase. That's what we are trying to do.
Thank you very much. Carlos, I have one question for you. I know we talked with folks about this before, but it seems that micro pensions just needs to be one of several things that are offered to be able to get the balance right between savings, micro lending, micro insurance. Is that something, have you had good experience with that, or have you just strictly focused on pensions as a solitary product?
Sorry.
So on gift a pension, we did experiment with insurance bundled with the pension product, and the uptake was actually quite good. So there was a life insurance component along with pensions. In other experiences, in fact, Rwanda is doing the same. I'm restricted to give more details, but yes, there is, when Rwanda is ready to launch, there are other benefits that the country is going to offer in addition to matching contributions along with insurance.
Have you found that as well, Krishnan? Is it important to offer a suite of products rather than just micro pensions?
Yeah, very much. What happened in these two instances, which I mentioned in Fiji and Solomons, is we actually set up an innovation hub or an innovation lab. So basically, how it works is it works on it has to answer or rather tick three boxes. Is there a demand? Is there a feasibility? Is there a viability? So while assessing the demand, we also see whether there is opportunity for including insurance and other suite of products with the pension. So in this instant case, we found from the feasibility assessments that people wanted to put away some money for their old age, but at the same time, they wanted some for shorter term like savings needs. So we gave a flexible product where like 50% of your contribution, voluntary contribution, will go towards a preserved account, and 50% will go towards a flexible short-term account. And this can be drawn for specific purposes like paying school fees, house repairs or medical emergencies or funerals and things like that. So that really worked well in the pilot phase. Then we have now come to, like I said earlier, to assessing, there's also a small fee for insurance. There is an inbuilt insurance scheme where in the event of death of the beneficiary, there's a fixed amount payout in lump sum. So there's a combination of flexible savings, insurance plus micro pension. So that's really useful.
Terrific. Thank you all very much for your statements. I think we'll open it to questions from the floor. So please, I'm not sure how you've been doing it before, but if you raise your hand, we can come to you. And if you could introduce yourself, it may be helpful, unless you all know each other already. Yes, ma'am.
We can hear you.
Hi, Marcia Tam Marks. I'm very, very pleased to hear what has been going on in the various countries. A couple questions. What's going on in the Pacific Islands sort of struck me as very similar to sort of the scenario we have in the Caribbean, where you have several islands. The population isn't that big either. One of the things you mentioned was a challenge was sort of getting good investment returns, because you really don't have the types of investments that you would have outside. Are there any investment regulations that would restrict you from investing these funds outside of the Pacific Islands? That's one question. And the second question I have is, when I heard Michael talk and Carlos speak, I was wondering, what would you say to regulators? Because I think in the region, I find there is a block from regulators to sort of have any appetite to allow something like this to happen, because there seems to be that there'll be opportunity for loss of control of the environment. What would you say to regulators in terms of where their focus should be for something like this, as opposed to where you're regulating the formal pension sector? This is an informal sector. The characteristics are very different. What would you say to them, in terms of them looking forward to regulate this particular industry?
Yeah, thanks. I'm happy that there's somebody from the Caribbean which has similar geographical characteristics like we do in the Pacific. As far as investment like regulations around investments are concerned, there are a few restrictions, but there are also exemptions where these pension funds can invest in sovereign funds of other countries like Australia. And there are investments made overseas. There is a percentage of portfolio that can be invested overseas. There is a bit of like currency hedging that happens, but that's largely taken care of by due diligence, which is done prior to investments. But these national provident funds are locally biggest investors in the sense that the government T-bills and bonds are hugely subscribed by these provident funds. And many of them also have big investments in the telecom companies, in various other like state-owned enterprises, etc. So much so that these 2 or 3 provident funds which we work with the superannuation funds which we work with, give an average return of 6 to 7%, like inflation adjusted, which is very good, which is much higher than what the commercial banks give, and that's why we feel that the informal sector is keen, at least in the feasibility assessments, to join these schemes. Now, coming to regulation, as was mentioned by the governor from Solomon Islands, in the Pacific, the central banks and the regulators are very, very progressive. Much before the word sandbox became popular, these central banks and the regulators have been using, instruments like guidance note, practice notes, circulars to give one-off exemptions for new innovations. We have mobile insurance just on the basis of a no objection certificate from the Bank of Papua New Guinea. In Fiji, there's a sandbox guidelines. In the Solomon Islands, as was mentioned by the governor, there is no law for the informal sector for the pensions, but the finance ministry gave a one-off approval for the scheme. So they are very progressive. In fact, they use this word that the market leads regulation.
Mr. Chaudhary, do you have a thought on that, and what message regulators should receive in terms of helping innovate? In terms of helping, so not being so necessarily so strict, or being willing to give up some control to foster innovation, if I understood the question.
In fact, that's what needs to be done by the regulators. In fact, initially, the main problem, as I said, that your accumulated pension funds
domestic, in the absence of domestic capital market, the reasonable return is now, if not possible, then that incentivizes the total system of the pension, micro pensions and pension schemes. So I think Krishnan said rightly that some sort of leeway should be given to the market to act somewhat autonomously and with a not very stringent regulations, but keeping a watch on the total system by the regulator. That should be the pathway for initial development of the market. So that's what my vision is about.
Carlos, did you have thoughts?
Yeah, well, in the case of Mexico, I would say that, first of all, regulators have to be proactive, right? I think let's say the usual model of the regulator is seen as, let's say, a little bit passive, more conservative, more let's not move too much the waters, because if not, things could go wrong, right, as you were mentioning. So, I mean, our experience really has been that if you don't take the initiative, things are not going to happen. So we took that decision. We obviously had to do some things that today it looks a little bit out of the box, but we didn't ask too much help from our, let's say, main bosses, which is the Ministry of Finance and other guys around, because we thought that if we did it that way, it would take us too long. Or probably we wouldn't be talking anything about what I just mentioned. So, I mean, we found our ways. We established clear rules that were clear for the pension providers, a universal system that where every pension provider had to be included. We established rules with the convenience stores that this had to be a model with low cost and no exclusivity. That was very important, and that has helped us to bring more providers into the system. And certainly, we took a lot of time thinking about the security of the model, right? Because introducing biometrics, and obviously now that we have the app where you can start saving, needs by itself a lot of security built in the system. So I would say, I mean, those issues were part of the, I mean, to be honest, and I think this is an experience for everyone, I mean, we clearly didn't have the model clear from the beginning, right? It was a trial and error process. We sometimes had to leave some projects in the table, focus on the more profitable ones, and certainly do some of the things that we've done have been step by step, and some have helped us to start building the model, right? So I think that is also important.
Thank you. Next question, please. Yes, ma'am. Either one. If you're close, and then we'll come to you. That's okay.
Hello, my name is Tanika, and I'm a student here at Georgetown University. So earlier we talked about the gender gap in pension inclusion, and the question of an individual's capacity to obtain pensions also came up. And we know that women in certain parts of the world have, there are systematic as well as cultural factors that inhibit them from getting pensions. So how can collaborative action be used, or how is it currently being used to combat that problem?
Who would like to go? Parul, do you want to take, and then maybe Michael will come to you.
That is a really good question, so thank you, Tanika. And you should have prepared me for that one. But if you say there is one correct answer, there isn't. But yes, women are certainly more vulnerable for access to any financial products. It's not really exclusive only to pensions. But we've also seen that traditionally women are better savers than men, and hence there's several models that happen in India and in Africa and across the world where you use the model of self-help groups and SACCOs to help women save, which are essentially women savings groups. And there've been factors that you've been able to see where savings can also be bundled through pension products, and you're able to. So women essentially need more access to be able to save, even if they may be in and out of the workforce, because they habitually save. So if you allow me, there's a lady that I worked with. We worked with Seva in India. Seva is one of the largest NGOs, and she was an embroidery worker, and her husband did not know that she worked as an embroidery worker. Her name was Meena, and she saved about 1,000 rupees. She earned about 1,000 rupees a week, which is 4,000 rupees a month. I'm sorry, I'm not too good with conversion. So Evan, if you can quickly give me a calculation on the monthly for 4,000 rupees. But, and out of the 4,000 rupees, she would put away 3,200 rupees per month to be able to save. And she did not work the whole year around. So if you're able to give them access points through community-based organizations, through NGOs and through self-help groups, then these replicable models can actually work. Same could work in India through self-help groups, or could work through SACCOs in Rwanda. So that's one way of looking at it.
Michael, do you have thoughts on that?
Yeah, I haven't seen really pensions specific to women, but I think one of the things we've learned from microinsurance in general is that there is a need in terms of sales, who's selling it, who's explaining. So the gender, the age is important. We have to recognize that oftentimes women are the decision makers. So even if it's not the pension for them, making sure that their husband is getting a pension or that both of them are, women are often the decision makers. Typically the man is up front. Often it's the woman in the back who says, yes, we'll do this. And so I think that's really important. So when we think about the education, when we think about the market focus, that should often be with women. And so I think that generates more success.
Now you have a question.
Thanks so much. I'm Holly Wise, also from Georgetown University. Carlos, I was very intrigued by the robust platform that you've built, and you mentioned the cross-border, or the ability to be one place and making deposits somewhere else. Do you envision that this platform is ripe for diaspora remittances, which are not targeted purely for consumption of family members at home, but for some sort of saving for retirement, obviously a pension sort of orientation?
Thank you for the question. Yeah, we are actually, I mean, what is possible now for people living in the U.S., Mexican migrants living in the U.S., we've done some work, some research, right? 6 out of 10 of them will come back to the country, or say they will come back to the country. Most likely they will not be, obviously, they would not be able to recollect Social Security benefits here in the U.S., and they would obviously go back to Mexico with 0 savings. So we have a big challenge there. So today they can open an account being here in the U.S., and they can find their pension account and see how much they have, and they are able to save through the app. Now, we are working with the guys that do the remittances, and what we think that we will be able to launch next year is the possibility that when you send the remittance, a part of it goes directly to your pension fund. So there will be like a link, an automatic link, where you are based in Chicago, Los Angeles, or wherever, and you will send a $10 remittance and just say, well, I want to put 50 cents to my pension account. That is likely to be possible soon, the next coming months. Yeah.
Yes, sir.
Yes, Richard Jackson with the Global Aging Institute. I'm the fellow who was overheard this morning saying that this is the sexiest topic in pension policy today, if you can imagine any topic in pension policy.
Do you want to go through the others?
If I may say something more about the excitement of my own life. But a comment and a question, if I may. First of all, I want to commend Pinbox and the many contributors to this remarkable effort. I mean, in my view, it's really hard to imagine a social issue of more long-term importance for developing countries. As the story of, is it Chandra in the, illustrated, I mean, relying on one's children, right, in an era of rapid, modernization and demographic change, for old age security is a pretty risky strategy. Governments have assumed until recently that the family would be a backstop, but they can't anymore. That works better. They can't anymore. And the response has mainly been to put in place non-contributory social pensions, which are a social necessity, but are also just a near-term palliative. They encourage the very thing, informality, right, the very condition that makes them necessary. And they may be affordable now when the elderly are 5% of the population, but they won't be so affordable when the elderly are 25%. So, I mean, this is incredibly important. And if you take that first take on Chandra's story writ large, right, across the population, you have a humanitarian aging crisis of potentially colossal proportions. So that's the comment, and really, you're all to be commended. The question is why we haven't heard anything about China. I guess the question is for you, Parul. Over the past 5 years, through the new rural pension system and the pension system for urban residents, essentially a pension system for migrant workers, both voluntary, to the extent anything in China is voluntary. They have enrolled 350 million workers in micro pension systems. There's some unique characteristics. Maybe there's some lessons there. I'm thinking in particular of family binding, if you're familiar with it. If you could speak to that, I would appreciate it. Thank you.
To be honest, I don't know much about China, and but I'm going to direct it right to Will Price because he's worked more in China than I would. So I think, Will, this is for you.
Thanks very much. Well, I'm going to partially disappoint on China because actually one of the reasons it's not in is partly just this kind of network, and partly it's just an enormously complicated country to know what's actually happening on pensions. So fortunately, just last week I was at a conference where someone went through what was happening in some of the pension schemes in China. And on the one hand, the expansion of coverage is sort of seemingly quite impressive. But part of it is based on old pension plans which were contributory and should have had assets which were done at the kind of local district level or city and town level. And basically the local authorities spent all the money on other stuff. And so there's a pension account, there's no assets left, and they've flipped it so you get an income from it guaranteed by the state. So suddenly you get the numbers, suddenly you get a promise of income. But the question that you then have is there actually going to be income? Because it's exactly the same kind of pay-as-you-go problem that Europe created. So you have amazing systems with great coverage, but do they last another 10 years or 20 years or 30 years? So it's a kind of, it's one of the ones you can sort of have to do a massively deep dive on. And whilst I've just got the mic, if I can just say a couple of things, again, as a sort of formal regulator. The thing about the regulatory flexibility I think is incredibly interesting, and it links to what we heard right from the very beginning, that if you separate out the different parts of the value chain and you have a more sort of plug-and-play mentality, as a regulator you can actually become much more relaxed about things, because if it's a single institution vertically integrated doing everything, you have to be pretty paranoid. If you then suddenly have people who are only doing the onboarding, you don't have to worry that they actually don't have the capacity to do administration, make sure there's no fraud, look after all the money, invest it well, because other entities are doing that and you can focus your regulation on the tough part. So I think this kind of the technology actually makes the job of a regulator much easier, because then you only have to police each individual bit just for the part that it's doing. And then just a final thing on the question on the gender. One of the interesting things we found for the work we did in India with Gautam and Parul, and taking it down to the village level, and particularly using these fair price shops, that was the place where the women were going certainly every single month, sometimes multiple times a month. They knew the person, they knew how it worked, so it's natural to use the point where people are already going to be the point where you add an extra service. And suddenly they don't have to go to the city or the town and get badly treated because they're not seen as high-value customers. So again, the kind of the technology and the access is powerful for gender, not because you're doing a gender-specific pension. You're just bringing pensions to where people, or to where women are actually doing the transactions. Then after that, they get the same investment, the same administration as anybody else, but you've just changed the way you've done access.
Thank you very much. Gautam.
Thanks. What I've seen, there seem to be a few areas where clearly, even in this panel and in some of the earlier panels, where there are, I think, very important questions which are not, shall I say, adequately answered, or which need further thinking and debate, I guess, but which cut across countries. And I think some of those are covered in the book in the form of thematic chapters. So whether it's in thinking through how to take care of the longevity risk by designing the payout phase more effectively and more efficiently so that people don't outlive their savings. Should this be done using annuity? Should we run with phase withdrawals? Should this be a combination? Should we have inflation indexed annuity? Should these be nominal, etc.? So I think what you'll find is that the issue of modest account balances across most of the countries that we are seeing is going to be an issue, whether you're talking Uganda or you're talking Rwanda or you're talking India or Bangladesh. And I think therefore issues of this nature, the second was what Muslim Chaudhry pointed out, which is investments. Again, an extremely important, very fundamental issue. Because if some of the countries here start succeeding with getting pension coverage, and they start accumulating a lot of pension assets, then the big challenge for them is going to be, how do we deploy this in a way which gives meaningful returns to subscribers and at least gives them positive real returns. A third issue could be, how do we think about integrating other products like insurance and a variety of insurances as a way to mitigate various other life cycle risks which could be insurable risks, as a way to release more savings for retirement. Fourth could be something that Beth mentioned, which is around behavioral finance and financial literacy issues. So what I'm saying is, these are all, I think, fairly important, fundamental, or even foundational issues to think through as far as developing countries are concerned. So while I have, on one side, I have in this room countries which are hungry for solutions, I also have people like, say, an Evan, or I have, let's say, Mike from Benchmark and, CM benchmarking, etc. So there is an incredible amount of wisdom and knowledge in these areas, and there is also hunger for solutions. And I think solutions on issues of this nature can be replicable. So perhaps there could be merit in us creating maybe doing a deeper dive on some of these kinds of issues, creating smaller groups where countries which want solutions and people who have experience in this area can perhaps put their heads together and think through some of these issues in a deeper dive. And maybe this could be an interesting next step in thinking about replicable ideas.
Terrific. Thank you very much. We have time for one more question or one more comment, if anybody would like to make it. Going, sir.
My name is Raymond Prasad. I'm from the Pacific Islands Forum Secretariat. Just one question in terms of what was mentioned by Nasimam in terms of small island countries and the population size, and comments also mentioned by the Caribbean. And if you look at the small island economies, the super innovation funds tend to monopolize the system, what is the scope of looking at a global solution to micropensions, where funds can be moved around and the returns can be maximized by looking at a broader scope of people, as well as increasing the value of the funds where it is needed most and where it is invested at a higher return compared to small island economies where 70% of the superannuation funds goes into the government bonds, and based on the liquidity situations, sometimes the government bonds are not the most attractive investment.
Yeah, I mean, like, I'll just respond to you, but it's open for all, for others who are into investment fund management. So what has been done limited to a limited extent is some sort of cross-border investments have been allowed. So that's why you have these offshore investments done in Singapore and in Australia by Fiji National Provident Fund and a few other national provident funds. The other solution, which I think, like I would like to, acknowledge the presence of the Secretary General of the Forum here, is something which we can discuss within the Pacific Island Forum, whether there can be a regional investment platform that can be created for the 10-14 countries that we represent. In fact, next month there's going to be this Pacific Superannuation Fund CEOs Forum happening in Tuvalu, where this could be an idea that could be planted. But this is a subject which is open for discussions by others.
Thank you very much. If we have no more comments or questions, my thanks to the panel and our thanks to you, and we appreciate your thoughtful contributions, and thank you to everybody up here. Thanks very much.
Hi, I just wanted to take a moment of everyone's time. I wanted to thank everyone who's made this event possible, everyone who supported this event. PFIB, UNCDF, thank you, Krishnan. CEM Benchmarking, Michael, thank you very much. And thank you to Paul as well, he's not here. I'd like to thank CFI, Axion, Beth, thank you very much. Walsh School, Georgetown University, Dean Hellman, Holly, Elizabeth. Where is Elizabeth? I don't see her now. But a big thank you to all of you, all the students who volunteered for the event to be successful. All the authors who have come and traveled miles and traveled hours and hours, still jet-lagged. And I know you only come for a day. A big, big thank you to all of you from attending this event, and all for the people who've driven here as well. Thank you very much for coming. I'd like to thank Will and Gotham, Achinth, thank you very much. The staff of Georgetown Hotel and Convention Center. And I hope you do join us as we continue this dialogue. We are going to be hosting the next one in Singapore next month, in fact, so I will be in touch with some of you. Eric, we've been working towards the next one as well in Rwanda. There's going to be one in Africa Level 1, South America, the Pacific, GCC, North America, South Asia, Pacific and East Asia. So we want to keep this dialogue going. We do want to have these regional meetings and tackle this problem as fast and as efficiently as we can. And please do join us for cocktails. The cocktails are in the West Wing, so you walk out the door, turn left and a left again, and we have cocktails there. So